I think you're going to see gold a lot higher than it is now. So let's say gold goes to $10,000 an ounce, like Jamie Dimon is now saying. If it goes to $10,000 an ounce and you've got a 20 to 1 gold silver ratio, you're talking about that's $2,000 silver, isn't it? Yeah, right. So, which sounds ridiculous. I'm not expecting $2,000 silver, but I am expecting something over 200.
In this insightful discussion, precious metals expert Mike Maloney explores what could happen if gold's price skyrockets in the coming years. He breaks down a bold scenario, gold reaching $10,000 an ounce, and how that could reshape silver's value, potentially pushing it above $200 if the gold-to-silver ratio tightens to 20.1. While Maloney notes that $2,000 silver might sound extreme, he emphasizes that market forces, inflation, and central bank policies could create powerful tailwinds for both metals. His analysis offers a realistic yet eye-opening look at what the next major bull run could mean for investors watching the gold and silver markets closely. If you found this helpful, like, share, and subscribe, and turn on the bell so you never miss future insights.
Yeah, well, like I said, it was for the first half of that bull market, it was just Western Europe. Canada was a very small population, but they did participate. Yeah, the U.S. didn't join the party until the first day of 1975. And it's interesting, Roosevelt had made gold ownership illegal back in 1933, but I believe it was 73% of the gold coins in circulation were not turned in. They remained illegally in private hands. And so when gold became legal to own in the United States, first day of 1975, it had gone from $35 to just under $200 an ounce by the end of 74. First day of 1975, it started to fall. And I believe that's all these people that were sitting on the coins that were passed down from their father, their grandfather, whatever, and they had been sitting on them for 50 years, not able to sell them because they were illegal. And so all these Ellis came out of from hiding, and at the same time, there was a bear market in stocks that ended, and stocks started recovering. And so gold went from just under $200 an ounce down to $103. It lost almost 50% over the next, I believe it was 18 months or so. It was toward the end of 76 that it bottomed at 103, but then it turned around. And the intraday high was actually $873, not the $850. $850 is the close. The intraday, though, $873. Coincidentally, the Dow Jones Industrial Average was at 873 points at the same moment. So it was a 1-to-1 ratio, Dow Gold. But it had only basically reached the level that it was at in 1980. Inflation, just using what I call this, I'm the person that coined the term the CP lie. There's basically two different sets of numbers that the government uses to measure inflation. The original set of numbers that they used from World War II until 1982, and then from 1982 until today, they keep on adjusting the CPI, and so I call it the CP lie because it way underestimates inflation. But even using that calculator, you come up with more than $200 an ounce to equal the value that silver had back in January of 1980. I mean, name something else that's selling at a discount to its 1980 price, and you really can't. When you compare it, in my book, The Great Gold and Silver Rush of the 21st Century, I compare it to the percentage price change in stocks, real estate, bonds, the growth of the M2 currency supply, and the Wilshire 5000 index, which incorporates pretty much all of the publicly listed stocks in the United States. And you end up with these price projections that range from $200 to about $2,000. I mean, some of them just are absurd, except it's just math. And the thing is that we have a tremendous shortage and a lack of supply of silver right now. We didn't have that back in 1980. This is a different. I don't understand the structural deficit that we have in silver, where there's less supply coming to market than the demand for silver each year. and the prices still being down where they were back in 1980. I think you're going to see gold a lot higher than it is now. So let's say gold goes to $10,000 an ounce, like Jamie Dimon is now saying. If it goes to $10,000 an ounce and you've got a 20 to 1 gold-silver ratio, you're talking about that's $2,000 silver, isn't it? Yeah, right. So, which sounds ridiculous. I'm not expecting $2,000 silver, but I am expecting something over 200. The first thing is I try to not make my investment decisions based on emotion. And so I use the gold-silver ratio to tell me whether or not to buy gold or silver. And because the gold-silver ratio has been so out of whack, I own 300 ounces of silver for every ounce of gold. It will come back into balance one day. We don't know when. It's going to take a little while. But I believe you're going to see the gold-silver ratio in the 20s or less. In other words, right now it takes 85 ounces of silver to equal the value of 1 ounce of gold. If it takes 80 and you buy silver and it goes down to 20 and you sell your silver and buy gold with it, you just got 4 times more gold than you paid for. And so it's a strategy that can be back tested at work. And for 2,500 years, the average exchange rate was about 13 to 16, somewhere in that range, ounces of silver to 1 ounce of gold. So this is something that has only existed since the big discoveries of the Comstock lode and the Silver Valley in Coeur d'Alene, Idaho, back in the late 1800s, and simultaneously governments around the world went on the classical gold standard and treasuries dishoarded their stockpiles of silver. And so all this silver flooded onto the market and silver's value plummeted compared to gold's value. And it has bounced up and down, but we've been at these historic high areas of like 100 to 1, and during COVID, 120 to 1, which had never happened. In 2,500 years of gold and silver being money, that had never happened. And so this was something that was a great opportunity. And by allowing the gold-silver ratio to sort of dictate to me which one I'm going to buy, I ended up buying a bunch of silver during COVID, right around $11 an ounce. And so that was pretty nice.
Pretty nice.
Right. But like I say, it's nowhere near done. When you look at how the bull market of the 70s progressed, and then you look at this natural balance that different sectors of the economy, stocks, bonds, real estate, precious metals, energy, and, when you do these, they're called ratio charts, where you divide one thing by the other. What you're doing is you're eliminating the national fiat currency from the equation. And the national fiat currency creates this smokescreen, this fog that we can't see through. You can't see what true value is.
In this deep dive discussion, Mike Maloney breaks down the fascinating history and hidden truths behind gold and silver's long-term value. He explains how gold ownership was once illegal in the U.S., and how decades later that restriction shaped modern price trends. Maloney explores how inflation, supply shortages, and manipulation have left silver trading far below its true value, even cheaper than in 1980 when adjusted for inflation. With central banks shifting away from bonds and the gold-to-silver ratio remaining historically high, he reveals why the next major correction could send precious metals soaring. This is a must-watch for anyone tracking real value in a distorted economy. Let's get into the interview.
The last one, the great gold and silver rush of the 21st century, it was 4 years of paying 2 research assistants full-time for 4 years and researching and writing that thing. And in it, I revisit through articles in Time magazine and so on, the bull market of the 70s. And I show some of the differences between the 70s and today. And there's this saying in the financial markets when people say, well, this time it's different, and then it never is. It's always just history repeating. Well, with precious metals, though, this time it is really different. In the bull market of the 70s, in the USSR, gold was illegal. There were no markets. If you could buy gold from another person, it didn't affect the worldwide spot price because there was no exchange. Same thing with Mao's China. India didn't have an exchange, and there was taxes and controls on coins and bars. Gold is still a very popular wedding gift, but it wasn't investment coins and bars. And then you look at Africa and South America and how incredibly poor they were back then. In the United States, it wasn't legal for Americans to own gold until the first day of 1975, and for Australia, the first day of 1976. And so really, it was only Western Europe, not Eastern Europe, but Western Europe and Canada driving the gold price. And then in 1975, the U.S. joined the party, 1976, Australia, but still, it was only 10% of the world's population. With the increase in the population of the planet since then, and then the fact that today it's every country on the planet except North Korea. They're the only ones that can't invest in gold and silver. And there are now exchanges all over the planet. There's exchanges in China, in Russia, in India, and they're everywhere. And so there's basically 18 times more people that can come chasing gold and silver this time around. And when I wrote the book, summer of 2022 is when this data came from. There was the OECD said that there was 55 times more currency on the planet, national fiat currency. Well, we've recalculated that since then, and it's closer to 80 times more currency. So you're talking about 18 times more people with 80 times more currency coming chasing a pile of gold that's only twice the size that it was back in 1980. And I don't know, I think the pile of silver is actually smaller than it was back in 19. So I'm looking for some pretty spectacular prices. And then you've got things like mainstream banks, Morgan Stanley, recommending to go from a 60-40 portfolio, 60% stocks, 40% bonds, to 60% stock, 20% bonds, and 20% gold. So they're saying sell half of your bond holdings and convert them to gold. This is just like a whole new world. This, to me, signals the beginning of the third and final phase of a bull market. And that is where you have the greatest amount of gains in the shortest period of time. So we should be seeing some fireworks coming.
In this powerful conclusion, Mike Maloney explains why today's gold and silver bull market is truly unlike anything in history. Unlike the 1970s, when only a fraction of the world could invest, today nearly every country has access to physical gold and silver exchanges. With 18 times more investors and nearly 80 times more global currency now chasing a limited supply of metals, the setup is explosive. Maloney points to major financial institutions shifting traditional 60-40 portfolios to include gold, a signal that the mainstream finally recognizes precious metals as essential to wealth protection. As fiat currencies weaken and demand surges, we may be entering the most powerful phase of this century's metals boom. For more insights on gold, silver, and the global economy, like, share, and subscribe, and turn on notifications for upcoming interviews.